So let's start income from salaries revision. So the moment you think of salary, it is a first head of income where the charging section is section 15. And in salaries, we only have three sections. One is 15, another one is 17 and 16. Nothing but 15, 16, 17. 16 talks about deductions from salary. 15 talks about charging section, whereas 17 talks about getting it. What do you mean by salary? What are other things that are taxable under the head salaries? So 17 subsection 2 says perquisites is also treated as salary because perquisite is a benefit received from employer by an employee. Profit in lieu of salary. Instead of salary, you're receiving something else, lumps of money. That is also taxable under the head salary because it is received from past employer or current employer. So that is what salaries is essentially talking about. Now, charging section. What the charging section says. First of all, before I even discuss about charging section, what is the overview of salary? You see, under income tax, under the head salary, if an employee is receiving any benefit from employee, getting it, these benefits are taxable under the head salary. Now the benefits are broadly divided into two categories. Benefits received when the employee is working. So I am working in a company. So every month in this year, whatever the financial year I'm working, I'm getting some benefits. So benefits during the service. And I may receive certain benefits at the time of retirement. Generally at the time of retirement, we generally receive monetary benefits. Whereas when we are in service, we receive two categories of benefits. That is monetary benefit, non-monetary benefit. And what are all the monetary benefits that you receive? What are all the non-monetary benefits that we receive is what given here as a list. I'm giving you this list which is important from exam point of view. More than this, let us assume if in salary we are discussing some 50 issues, 50 types of benefits. Out of 50, I have covered almost 40 items here. 10 items are not at all relevant. That no use at all. Getting the point? So all the benefits that are important from exam point of view, I'm covering. Getting it? Now, so what various benefits that we get, we have listed out. Now these benefits in the Bear Act, in the section 17, the benefits whatever I have showed right now, getting an overview, they are classified into three categories. Some benefits, they are called as salary. Some benefits which SSE receives, which employee receives, either monetary or non-monetary, they are called as perquisite. Some benefits are taxed under profit in lieu of salary. Now, many students get confused. What do you mean by salary versus perquisite? How they both are different? Salary means something I pay to employee and I don't ask him any question. What purpose he is spending doesn't matter to me. All the allowances, getting it, basic salary, dearness allowance, whether this DA is for retirement benefit or not retirement benefit. In exam they may give you for retirement or forming part of terms of employment, any word they can give. Nothing but this dearness allowance is something which is considered for retirement computation benefits of that employee. Remember, DA you will find only in government companies and government organizations, not in private sector. Dearness allowance is not compulsory in private. You don't find in any private sector DA. And bonus, commission. Commission is again two types, percentage of turnover and fixed commission. Getting it? There are two types of commission. Either it is given as a percentage of turnover or fixed commission. Getting it? So bonus, commission, DA, basic, entertainment allowance, HRA, house rent allowance, leave encashment, gratuity. Getting it? So all these items, contribution by employer to Provident fund in excess of 12% of salary, contribution by employer towards interest in excess of 9.5% rate of interest, contribution by employer to pension scheme. All these are monetary benefits which are directly given for the purpose of employee, directly monetary benefits. These are all treated as salary within the meaning of 17 subsection 1. Now what are all perquisites? Perquisites means salary is something which I give and I don't ask any question. Or on the employee name, I will give some benefit to the employee monetarily. That and all salary. Now the perquisites, again this may be two types. Either the perquisite is reimbursement or the perquisite can be non-monetary facility. The perquisite can be either a non-monetary benefit facility or it can be a reimbursement. Remember, only reimbursement and non-monetary benefit given to an employee comes under perquisite. Getting the point? Suppose employee is incurring some medical expenditure. We are reimbursing that. Company is reimbursing. It's a perquisite, taxable in the hands of employee. Of course, we have some exemptions. We'll discuss later. Getting it? And suppose we have given a car facility. It's a perquisite. whatever the valuation rule, perquisite valuation rule, we compute some value, we will tax it accordingly. We are giving some furniture to the employee for usage. It's a benefit given to the employee. It's a perquisite, non-monetary. So perquisites are basically reimbursement and non-monetary benefit. Reimbursement means what? First of all, perquisite means something which is given for personal benefit of the employee. Perquisites are nowhere related to official purpose. They are absolutely, completely for personal benefit. Only employee will get benefit there. No benefit to organization. So those are called as perquisites. These personal benefits are either reimbursement. Reimbursement means what? Employee incurred some expenditure for personal reason. That amount, he showed me bill, we are reimbursing it. Suppose employee went and bought some, spectacles, or lens, or he went for laser treatment of eyes, whatever, something. Company reimbursed the expenditure he spent, showed the bill, we gave the money. It's a reimbursement, it's a perquisite. Or facility like car, getting it? Education facility, medical facility, various transport facility, getting it? So these are all facilities. Both are treated as perquisites because these are used for personal benefit of the employee. Perquisites are taxable. We have some exemption rules. Now, sir, reimbursement means suppose company reimbursed 1 lakh. If say employee spent 1 lakh for personal, company reimbursed 1 lakh. Accordingly, 1 lakh is taxable, sir. How to tax non-monetary items? Suppose company gave car, sir, car facility. Okay, how to tax this item? Valuation rules were given for perquisites. Those valuation rules we have to apply. Getting it? Fine. So salary means all monetary items which we give to the employee. We don't ask any question there. Okay, basic salary I am paying, DA I am paying, some allowances I am paying, bonus giving, commission, whatever. Getting it? All these items are salaries. These are all allowances. All items which are in the nature of allowance, allowance means what? I pay money at first. I don't ask what he did with that money. So those kinds of money, whatever I give, that's called salary. Suppose an employee joined in an organization, you are paying 50,000 salary to him monthly. Do you ask him what is the breakup of 50,000 for what he is spending? No, that's a salary. All the items that are salary or in allowance in the nature of salary, that and all taxable under 17 subsection 1. They are all treated as salary. All the items which are personal purpose, where you are reimbursing or where you are giving a facility, whatever the value you are giving, that is taxable as perquisite. Perquisite is also treated as salary. Able to understand? Now, charging section. What the charging section says? Any sum due from an employer by an employee, any sum due from the employer during the previous year is taxable for salary. Second, any sum received from employer is taxable for salary. Nothing but if you collectively read, if any amount is due from the employer or received from the employer, whichever is happened earlier, so it is taxable. That's why they call it as due basis or accrual, receipt basis, whichever is earlier. Due is different, accrual is different. Suppose if April month salary, current month salary is due on 1st May, then 1st May, April month salary is taxable when 1st May it is taxable. May month salary is taxable in which month? June 1st. March month salary is taxable in April 1st. March 2023 salary is taxable in April 1, 2023. April 1, 2023 comes under 23-24 previous year. You understand? Accrual means what? April month salary taxable in April only. When you pay, doesn't matter. March month salary taxable in March only. When you are paying, doesn't matter. That's the difference between due and accrual. Salary is head of income. Salary is taxable on what basis? Due basis it is taxable. Able to understand? So, what are all the due dates are there in the previous year? Salary due dates, check out. On these due dates, how much amount of salary became due? Check out. That much only taxable. Sir, the amount of salary was due, no. That is belonging to last previous year. Doesn't matter. It became due in this current year, no? It is taxable in current year. Same way, if at all an employee received salary in advance, next month salary I received, in March month only I received next year April and May month salary in advance, and I told employee not to pay me April and May again. Amount received in advance is taxable in the year in which it is received. Suppose if I receive a loan from employer, which is where employer will deduct from my salary in 20 months, that's a loan. Loan is not a salary. It is not taxed as income. However, on the loan, interest amount I am not paying to the company. I took a loan from the company, but I am not paying any interest to the company. It's a benefit received by me. It is treated as perquisite. For that, valuation rule is that we will discuss. I hope now you understood the charging section briefly. Getting it? Now, what are all the elements that are there in salary? There are various elements. You have something called salary, which is including basic, DA, whether for retirement or not for retirement. Retirement is also expressed as terms of employment. In exam, they may give you DA for retirement benefit, or within bracket, they may give you terms of employment. Bonus, commission, whether it is percentage of turnover or fixed commission, everything is monetary benefit. Transport elements, children education elements, children hostel elements, HRA, telephone elements, medical reimbursement. Remember, reimbursement is a perquisite. Lunch allowance is a salary. Gift allowance is a salary. Interest free loan is a perquisite. Contribution to RPF is a salary. Interest on RPF, that is a salary. Leave travel concession is a salary. Yes or no? Tax paid by employer, on the salary of employee, that is exempted. Life insurance policy on the employee is exempted. Medical policy on the employee is exempted. All these points now we are going to cover. Are you clear? Now at the time of retirement, a person might get gratuity, pension. Pension, there are two types: uncommuted, commuted, leave salary, voluntary retirement receipt, retrenchment compensation. But retrenchment compensation we are not discussing because it is not at all important from exam point of view. Further, he will get non-monetary benefits like accommodation, mobile asset, car, medical facility, telephone facility, all that. Now, one by one, we will be discussing. Now, so, we will be discussing accommodation facility at last. So, first I will be discussing, if at all an employee is retiring, what benefits he is getting. So, one benefit which employee might get is gratuity. One benefit which employee might get is gratuity. Remember, if gratuity is received on retirement, exemption under 10 clause 10 is available. There is a section called 10 clause 10. In that clause, exemption is given for gratuity received on retirement. If at all gratuity is received before retirement, during the service, fully taxable. Now, if the gratuity is received by government employee, for him it is fully exempt. If the gratuity is received by non-government employee, then it is having exemption under 10 clause 10 to certain limits. So, suppose if gratuity is received by an employee for whom payment of gratuity act applies. Suppose an employee is receiving gratuity where for him act is applicable, or suppose if the gratuity is received by an employee where payment of gratuity act not applicable. Now, how to calculate exemption? Now, exemption is lower of the following. How much exempted? Actual amount, how much? Because exemption cannot be more than actual. Suppose you receive 10 lakhs gratuity. How much is exempted? Maximum 10 lakhs. Statutory limit of exemption is 20 lakh, or 15 by 26 into last drawn salary into completed years of service or part thereof in excess of 6 months. What does it mean? Suppose if an employee completed 30 years 7 months, it is treated as 31 years. If an employee completed 30 years 5 months only, it is treated as 30 years only. So if at all an employee who has completed an year, who has completed more than 6 months in a year, it is treated as full year. Otherwise, it is treated as no year at all. Getting it? Now, at the time of retirement, what is last drawn salary? At the time of retirement, what is your salary? So that is called last drawn salary. Now, sir, salary means what? You are saying salary includes so many. What are they? Here, for the purpose of gratuity, where gratuity act is applicable, basic plus DA basic plus dearness allowance. Here, any DA you may consider. Salary means that. So, take what is the last drawn monthly salary. Last drawn monthly basic salary, how much? Dearness allowance, any DA, retirement, non-retirement, doesn't matter. Now, multiply with 15 by 26. 15 by 26 into basic plus DA, any DA of that last month. Multiply by how many years he completed, or more than 6 months if at all he completed any other year, that also you take it as full year. So, that you apply, you get some amount. Now, among these three, lowest amount is exempt. So, employee received something, exemption is something, balance amount is taxed as salary under 17 subsection 1. This is gratuity where act is applicable. Now you see, sir, I told no, salary means this. In this salaries chapter, we have mainly 3 salary definitions. 3 definitions for salary. Suppose, if at all the word salary is used for exemption under gratuity, when you are calculating exemption under gratuity, where gratuity act is applicable, they have given 3 criteria. One of the criteria is what? 15 by 26 multiplied by last drawn salary. What does it mean? Salary at the time of retirement. Salary means what? Basic plus any dearness allowance plus nothing. So basic plus any dear. So that is what salary at the time of retirement. Now here in while calculating gratuity exemption where act is applicable, they have used the word salary, right? Salary means this. Now same way the word salary has been used at various locations. Recognized provident fund, employer is contributing to RPF in excess of 12% of salary is taxable, beyond 12% of salary is taxable. Now 12% of salary means what? Salary means what? Basic plus DA for retirement plus commission, only percentage of turnover. Fixed commission you should not take. Here DA only if it is for retirement benefits you should take, other DA you should not take. Getting the point? Now this salary definition is applied at 5 places: RPF, HRA, gratuity, leave encashment, voluntary retirement compensation. In all these 5 cases, in all these clauses, in all these exemptions, if the word salary is used, salary means these 3 components. Suppose if it is used for gratuity where act is applicable, this one. Suppose if it is for gratuity where act is not applicable, an employee received gratuity at the time of retirement, but for him gratuity act do not apply, still he received gratuity. Now for him, how to calculate exemption? They have given a criteria. In that criteria, the word salary has been used. In fact, average salary word is used. Salary means what? This one. Now suppose employee was given rent-free accommodation facility. Now accommodation facility, the company gave any accommodation to employee, so how much is benefit value? Perquisite valuation rule says some percentage of salary. Salary means what? Basic plus DA for retirement plus any commission, bonus, taxable portion of allowances. Actually for RFA, if you see original salary definition given in the book, it is very comprehensive, very big, that if you convert it into a particular meaning as a formula, this is the definition. If you apply this formula, I am telling you, you will get absolutely correct answer. So basic salary. So while you are computing accommodation benefit, salary means these components you take. Anyhow, when I am discussing that, I will once again come back and show you what are all this. So I am just giving a brief idea. Getting it? So very simple. By the way, if at all any of you are looking for these 3 points, you can take a note of it, or alternatively, you download rest for CACMA application. You download rest for CACMA application. Just a minute. You download rest for CACMA application. So just a minute, sorry. So inside that there is a course called Group 1. Open this Group 1. So inside this content, November 23. Getting it? So inside this P4 taxation is there. P4A taxation is there. Inside the salaries chapter is there. Inside this you can download salaries overview file, accommodation facility. These 2 PDFs are unlocked. You can download this. Getting it? So anyhow, so that's it. Now let's continue with the gratuity. So if an employee who is receiving gratuity where he is covered under Gratuity Act, which of these three items were the right? Least of them is exempted. Suppose if an employee is receiving gratuity but he is not covered under Gratuity Act, how much is exempted? Actual 20 lakh, 15 by 30, nothing but half a month salary multiplied by average salary multiplied by completed years of service only. More than 6 months point is not there. Suppose if an employee completed 30 years, 11 months, 10 days, we still consider it as 30 only. Sir, 11 months extra he worked? No, we don't consider. So only completed years we look into. Multiplied by average salary. Salary means what? Basic plus DA for retirement plus commission as a percentage of turnover. Now that salary you should take. Which salary? Average you should take. Average of how many months? Last 10 months preceding the month in which employee retired. So in which month employee retired? Check out. Before that, last 10 months, basic total it. DA for retirement total it. Commission as a percentage of turnover, whatever is there in the last 10 months, total it. Divide it with 10. You will get average salary. So that amount you keep it here. Now 1 by 2 into average salary into completed years of service. So this is what treated as, third criteria. So among these 3, whichever is lower, that much is exempted from the gratuity received by the employee. So first, what is amount received minus these 3, whichever is lower, that is exempted. Are you clear? Don't worry, at the end of this video you will find once theory concept provision discussion is over, you will find problem solving also. So don't worry. So most of the adjustments, most of the provisions whatever we are discussing, we have solved it in the form of problems. Next up. Now so this is regarding gratuity. Over. Now in this they have given certain points. This 20 lakhs is lifetime limit. Suppose if an employee is getting gratuity from 2 or 3 employers, from all the employers put together, exemption cannot exceed 20 lakhs. Next. So what is the next benefit? So now right now we have covered gratuity point. We have covered gratuity. So whatever I have covered now, I will highlight it with green color. So now let's continue. Pension. So how to understand pension? How to calculate pension value? Now the pension is of two types. Generally pension is received at the time of retirement or after retirement you will receive. Pension that you receive generally monthly. That's called uncommuted pension. What is it called as? Uncommuted. Suppose you may also receive in lump sum. That is called commuted pension. Suppose after you retire, no, company offered you 15,000 rupees monthly pension. Okay, they offered you 15,000 rupees monthly pension, 15,000 they offered you. Alternatively, you can take 15 lakh lump sum also. They told you these two options. You can take 15 lakhs lump sum or take 15,000 monthly pension. What you did, sir, you give me 5,000 rupees monthly, 10 lakhs I will take lump sum. You gave this option called, sir, I will take 10 lakhs lump sum, sir. 5 lakhs I don't want. Instead of that 5,000 you give me monthly. You told this proposal to the company agreed. Now you are getting monthly how much? 5,000. Whatever number of months were there in that year, that is fully taxable. Whether the employee is a government employee or non-government employee, monthly pension received is fully taxable. Now you are receiving lump sum. What about this? There is a section 10 clause 10A. There is a 10 subsection 10A, they refer it as, but it's actually clause 10 clause 10A. So this clause says lump sum pension received is exempted as per below. How much is exempted? Suppose if the employee is receiving gratuity, he is receiving gratuity, claiming exemption also for the gratuity, then how much is exempted? 1/3 of full pension value. Whatever full pension value is there, in that 1/3 is exempted. So how much amount received? Check out. Minus 1/3 of full pension value is exempt. Now full pension value, how to calculate? In this case you see, monthly he is getting 15 originally, but he only took 5,000. How much he sacrificed? 2/3 of the monthly pension he sacrificed. Monthly he is getting 15,000, but he is only receiving 5,000. 10,000 he sacrificed. So in 15,000, 10,000 proportion is what? 2/3 he sacrificed. For sacrificing 2/3, lump sum how much is getting? 10 lakh. Now for 2/3, lump sum amount is 10 lakhs. For full amount how much? So 10 lakhs is for 2/3. So it is for 2 portion. So which means 3 portion means what? Full value is 15 lakh. 15 into 1/3 how much? 5 lakh. Employee received how much pension? 10 lakh in our example. How much is exempt? 5. So 5 lakh is taxable. If you want, once repeat this video, last 5 minutes once again. If at all you did not understand, just repeat this video. So in exam they'll give you employee commuted 60% of the pension for 3 lakh. Employee commuted 40% for 2 lakh. Employee commuted 70% of the pension for 5 lakh. How to identify full value? How much amount received divided by what is the commutation percentage? Apply. You will get full value. On that full value, how much is exempted? 1/3. That is exempted value. Exempted value you should reduce from which value? Full value. No. You should reduce exempted value from pension received in lump sum. Suppose if the employee is not receiving gratuity, then how much he received pension? Identify lump sum. In our example, 10 lakhs received. Now how much is exempt? Half of full pension value. Full pension value is 15 lakhs in our question. So half of full pension value means 7.5 lakh is exempt. So 10 lakhs he received, 7.5 exempt, 2.5 lakh is taxable. And remember, if commuted pension is received by a government employee, it is fully exempt. Commuted pension received by non-government employee, then it is exempted as per the below. If he is receiving gratuity, then how much lump sum pension he received? Put it. Minus 1/3 of full value, full pension value, commuted value they'll give, no, divided by how much percentage the commuted. Check out, apply that. You will get full value. So 1/3 into full value amount you will get. That you reduce from amount received from lump sum. Taxable amount you get. Same way, half of full pension value. If the employee is not receiving gratuity, then from the total pension received lump sum minus half of full pension value is exempt. That's it. So this is related to pension. I hope you are clear now. So I discussed both. What is uncommuted? That pension which you are receiving monthly without any commutation. Commutation means transfer of right. Getting it? Now commuted pension. Commuted means what? Lump sum pension. Further we have 10 clause 10A exemption. For government employee it is fully exempt. For non-government, just now we discussed. Then we have something called leave encashment. What is meant by leave encashment? What is meant by leave encashment? Very simple. Every year company is giving me some 40 or 50 days leave. Every year I can take these many leaves. 20-30 years I worked in this company. 20 years I worked in this company. So every year 40 days I can take. 20 into 40, 800 leaves I can take. But you know what? I only took 400 leaves. 400 leaves company extra gave me, but I didn't use. Now these 400 days I told company, please give me cash now. I came and worked now. Even though you gave leave, I came and worked now. So you give me cash for that 400 leaves. So company gave me. So what I did, whatever leave I have, no, accumulated leave, I encashed it. That's called leave encashment. That's called salary for the leave period. That's called leave salary. So if an employee is receiving leave salary, government employee fully exempt, non-government employee under 10 clause AA, 10 clause 10 AA, under this leave encashment is exempted to the extent of least of the following. So actual amount, one criteria, 3 lakh, 10 months multiplied by average salary, then you know, how much is unutilized leave? Unutilized leave identify. Unutilized leave identify. Divided by 30. Multiplied by average salary. This much. Out of these 4 categories, whichever is lower, that is exempt. Now, what do you mean by, how do you calculate unutilized leave? How do you calculate this unutilized leave? First of all, leaves granted per annum by the company are 30 days per annum, whichever is lower. This you calculate per annum, multiplied by completed years of service. Part thereof in excess of 6 months, don't consider. So, leaves per annum, how much? Or 30 days per annum, whichever is lower. If company is giving 40 days leave every year, 30 days only we should consider every year. So, 30 or 40, whichever is lower. So, 30 into complete year 30. So, total you are eligible for 900. How many? This is a total leave availed minus total leave available minus you already availed, means utilized 400 leaves, means 500 is unutilized leave. So for 500, so for 30 days this much is the average salary. For 30 days this much is the average salary. For unutilized leave, how much? This much is exempt. Are you getting it? So in these 4, whichever is lower is exempt. So 10 months into average salary, one criteria. Unutilized leave divided by 30 multiplied by average salary is another criteria. How to calculate this unutilized leave? Very simple. Total leave minus utilized leave, unutilized leave. Total leave, how you should calculate? How many years you worked in this company multiplied by how many leaves you are eligible in a year. If you are eligible in a year more than 30 days leave, then take 30. If you are eligible every year less than 30, then take actual leave per year into total years. Is minus leave utilized by you during this 30 years, then you will get unutilized leave. For 30 days you are getting this much average salary. For unutilized leave, how much? That is 4th criteria. Listen to the past 5 minutes once again, you will get clarity. Most of the students at CA Inter do wrong in leave encashment problems. The reason is they don't understand the 4th criteria. Up to 3rd criteria everybody will do correct. These 3 criteria, everybody will do correct answer. 4th criteria, many will do mistake. Why they do mistake is they don't understand the concept of unutilized leave. How to compute unutilized leave, they don't understand. How to compute unutilized leave? Total leave minus utilized leave. Utilized leave, they'll give you in the problem, always. Getting it? Total leave, how to calculate? Actual leave per annum available or 30 days per annum, whichever is lower, multiplied by number of years employee completed service is equal to total leave. Minus utilized leave, they will give in the problem. You will get unutilized leave. Divided by 30, multiplied by average salary over 4th criteria. Among these 4, whichever is lower, that much is exempt. So how much you receive? 10 lakhs. Here you calculated lowest value, 2 lakhs you got. So 2 lakhs, 8 lakhs is taxable. That's it. You clear. So that's leave encashment. Now here also they have used the word salary. What do you mean by salary? Salary means basic plus DA for retirement plus commission percentage of turnover. So gratuity where act is applicable, basic plus any DA. Gratuity where act is not applicable, basic plus DA for retirement plus commission percentage of turnover. Leave encashment, basic plus DA for retirement plus commission percentage of turnover. Are you clear? Getting it? By the way, whatever I am explaining, that and all were there. You see here, directly I'll go to, gratuity point. So here it is, pension point is given, pension point is given here itself. Pension, this is our main book. You can download this book in Shrestha application or even on the website. You go to website shrestha.cacma.com, there you can download. So pension, commuted pension, uncommuted pension, both I have given. We have even given an illustration. You can solve this illustration. I'm telling you, if at all you solve our book, whatever illustrations we have given in our book, by the way, you can even download the workbook like this. We have a workbook like this also. If you just download this workbook from our website also, if you solve this workbook completely, I'm telling you 99.99% questions will be from this workbook only. Just numbers will be changed. That's it. All the adjustments that are going to be asked in exam, all are covered here. So pension point here I have given entire thing, whatever I have told. Gratuity point, government employees exempt, defense people exempt, other employees non-government, act is applicable, I have already told. Act is not applicable, I have told. What do you mean by salary when act is not applicable? What do you mean by salary when act is applicable? Everything I have covered. Then we also covered right now leave encashment, leave salary. For government employee is fully exempt. For non-government employee, 4 categories we have, 4 criteria. So how much you receive? Minus out of these 4, least amount, that much is exempt. So salary means what? I have already told. That's it. So which means leave encashment is also completed. Now leave encashment, pension, monthly pension, uncommuted, gratuity, all these are taxable under 17 subsection 1 as part of salary. Now voluntary retirement compensation, what is it? VRS. VRS is taxable as profit in lieu of salary. Of course, at the end of the day it is taxable, but how it is taxed? Gratuity, pension, leave encashment, these are taxed as salary, whereas this is taxed as profit in lieu of salary. So now, public sector companies or private sector companies or private companies or some governmental organizations, only they are eligible to give VRS. If they are giving any VRS compensation to employee, getting it as under a scheme of voluntary retirement, company want to reduce the staff. Overall staff of the company should reduce. And if an employee in a scheme of VRS program receiving compensation from the company for voluntary retirement, and this employee has completed 10 years of service or has 40 years of age, then this person is eligible to get exemption under 1010C. Suppose if an employee who has not completed 10 years of service, if this fellow is getting VRS, fully taxable, no exemption. If an employee completed 10 years of service and receiving VRS under a scheme of VRS, approved scheme of VRS, then 1010C exemption is available. How much is exempted for VRS? Very simple. Actual amount 5 lakh only. Just a minute, sorry. There's so many limits now. So sometimes 5 lakhs or 3 lakhs or some amount is there. Just a minute. It is there in profit in lieu of salary. Sorry. It is there in profit in lieu of salary. Correct only. Always. Just confirmation. 5 lakhs only. 3 lakhs limit is only for leave encashment. In all other cases, it is either 5 lakhs or 20 lakhs. Okay, fine. So 5 lakhs or 3 months into average salary. Yes or no? 3 months of salary for 3 months of salary for each completed year. For how many completed years is there? Into 3 months of salary. Salary means last on salary. That's enough. Third criteria. Salary at the time of retirement are nothing but salary multiplied by number of months service left. If at all you are not retiring, how many more months you can service for the company? That many months multiplied by last on salary. That is one criteria. Second criteria is what? 3 into completed years of service into salary. Last on salary. Salary means what? For VRS, basic plus DA for retirement plus commission percentage of turnover. Then actual amount or 3 lakh or this one 3 into completed years into last one salary. Fourth criteria, number of months service left multiplied by salary. Salary means what? Basic plus DA for retirement plus commission. So find out these four criteria, whichever is lower, that much is exempted for under VRS 1010C. That's it. So with this, we have even completed, retirement benefit. Now all the retirement benefits that generally be asked in exam, we have completed. No more retirement benefit. That's it. Now let's discuss, monetary benefits which an employee will get. Suppose in the question they are giving you basic salary, fully taxable, DA for retirement, fully taxable, DA, normally they said, nothing is mentioned. They just said DNS elements, nothing they spoke. That's a normal DA, not for retirement, fully taxable. Bonus is taxable, commission is taxable, fixed commission is taxable. Transport elements. Now, what is this transport elements? Getting it? Just a minute. So transport elements, so there is something called transport elements. Transport elements. Suppose if transport elements is given to a blind, deaf, dumb or orthopedically handicapped. To these people, if an employee who is a blind, deaf, dumb or orthopedically, nothing but physically handicapped person in lower extremities of the body, for him, if at all we give any transport elements. What is transport elements? For coming from home to office, then returning to home, nothing but for commutation between home and office. For that purpose, companies even transport elements. Then up to 3,200 is exempt. Whether the employee is choosing 115 BAC or not, he may be choosing optional tax regime, he may not be choosing optional tax regime. Irrespective of that, up to 3,200 worth of transport elements received by him is exempted. Suppose if transport allowance is given to a person working in transport sector, he is working in transport of passenger or transport of goods. So I am working in a transport company. I am receiving transport allowance. How much is exempt? 70% of allowance received. 70% of allowance received is exempt, but maximum exemption is 10,000 per month. Suppose if company is paying me 10,000 monthly, exactly. Let us assume company is paying 10,000 monthly and the person is working in transport sector. How much is exempt? Entire pen exempt. Wrong. Students do this mistake. If at all you are receiving 10,000, you are receiving 10,000 transport allowance every month and you are working in transport sector. How much is exempt? 70%. That is equal to 7,000 or 10,000, whichever is lower. 7,000 only exempted. So if an employee working in transport sector, if he is receiving transport allowance, how much is exempt? 70% of the allowance received or 10,000, whichever is lower. That much only exempt. In addition to this, company may give transport facility. Getting the point? Transport facility means what? Company itself is arranging bus for the employee to come from home to office, office to home. Fully exempt. Fully exempt. Transport facility is fully exempt. Able to understand? Suppose if the company is giving a transport facility for employee tour purpose, employee is going on a tour for personal reason, vacation, for that company is giving transport facility, whatever market value is it, that much is perquisite. If it is given in railway, whatever the railway fare is, that is perquisite. If at all, if it is given in airway, airway is the perquisite. Able to understand? If it is for personal reason. But anyhow, transport facility point is not at all important from exam point of view. Therefore, right now what we have completed regarding transport, we have completed transport allowance point. I hope now you understood transport allowance is understood. Transport facility also we have completed. So whatever we have highlighted in green, we completed. Now next, children education allowance. Children education allowance. What is this? You know, an employee, he may give either education allowance, or employer may give education facility. Employer may give education facility. Suppose if education facility is given to children of the employee, if the education facility means what? Employer is having a school or employee had tied up with our particular school. In that school, only these employer children, only this company employees, their children only will join in that school because the employer company has a tie up with that school. Now in that school, employee joined his children's. Getting the point? Now that entire cost of education employer is only bearing. Getting it? It is not reimbursement. Employer is only bearing it completely. The facility itself, you told employee, go and join your children in that school. Or we have our own school. So I told employees to join their children in our school itself. Education facility. Now, what is the perquisite? If cost of, what is it? If cost of education in similar institute is less than or equal to 1,000 rupees per month, then it is fully exempt. If cost of education in a similar school is exceeding 1,000, it is fully taxable. Fully taxable. What do you mean by fully taxable? Exceeding 1,000? No. Suppose my employee, I am working in a company. My children, I joined an employer school. That's an international school. Similar education cost is 20,000 per month. Entire 20 is taxable because the cost of education per month exceeds 1,000. Therefore, entirely taxable. Sir, 1,000 exceeding means only 19,000 you can tax monthly. Why entire 10? Why entire 20 you are taxing? Because this 1,000 rupees is a threshold limit. This is not a slab limit. What they said, they only talk about exemption. What they told, if cost of education in similar institution does not exceed 1,000, it is exempt. What does it mean? If it exceeds 1,000, fully taxable. Alternatively, many others, what they are doing is up to 1,000 they are claiming exemption. Excess amount facility cost they are taxing. Anyway, you can follow in exam, but you should mention alternative view as a note point compulsorily. Suppose if education facility is given for any other member of the employee, if any other person on behalf of employees taking education facility, company is bearing cost, fully taxable. Whatever cost of education in a similar school is there, no, fully taxable. No 1,000 rupees limit also, fully taxable. Suppose company is not giving facility, we are giving allowance. We are giving allowance to employee. Allowance means what? I give some money, whether he will spend it or not, that is his choice. Allowance, education allowance is exempt up to 100 rupees per month per child, maximum 2 children. Maximum for 2 children, 100 rupees per month per child exempted. Now, suppose for one of the children, company paid 120 rupees. For another children, company paid 90 rupees allowance. Getting the point? 90 rupees only allowance company. The allowance itself is 90 rupees. Getting it? For one children we give 120. 100 is exempt, here 90 only exempt. So 20 is taxable, here 0 is taxable. Some students what they do is they merge these two, 210. Now up to 2 children, 100 exempt, no 200. So they only tax 10. That's wrong answer. You should calculate children wise exemption. And children wise elements taxability you should calculate. Remember, careful. So education elements, education facility, both are over. I hope you are able to recollect all the concepts. So education facility is over. Now suppose no, employee children are staying in hostel. For that purpose we are giving hostel elements also. Employee, for employee children, hostel purpose, employer, company is giving some elements. It is exempted up to 300 per month per child. So per child per month, how much is exempted? 300. Maximum for 2 children. Getting it? So hostel elements is also over. Hostel elements is also over. Next we will discuss house rent elements. What is it? House rent elements. Now look at carefully. House rent elements. So you know, a company, you know, whenever a company recruit an employee, you know, companies, you know, they generally give accommodation to employee. Accommodation to employee. Accommodation is a facility. Accommodation facility means companies having staff quarters. In that quarters, one bungalow is allocated to employee. That's a facility given to employee. So that's a perquisite which is valued as per valuation rule. Alternatively, company may give rental allowance. That's called house rent allowance. What is it called as? House rent allowance. So for rental expenditure purpose, we are giving house rent allowance. Now, if house rent allowance is given, there is an exemption given for that under 10 clause 13A. How much is exempt? How much amount actually received per month? How much is rent paid in that month minus 10% of salary minus 50% of salary. If at all you are paying rent in a city, Delhi, Kolkata, Mumbai, Chennai, then 50%, or 40% of salary if at all you are paying rent in any other city. Suppose if at all you are staying on in a rented accommodation, you are paying rent. That accommodation is in some other city, not Delhi, Kolkata, Mumbai, Chennai, then 40% of salary is one criteria. If at all you are staying in a rented house in Delhi, Kolkata, Mumbai, Chennai, then 50% of salary. Second criteria, how much you are paying rent monthly minus 10% of salary. Salary means what? Basic, DA for retirement, commission percentage of turnover. I told you for 5 purposes salary means same. RPF, HRA, gratuity where act is not applicable, leave encashment, VRS. In all these 5 cases, salary means basic plus DA for retirement plus commission percentage of turnover. We already completed gratuity where act is not applicable. So one time salary we discussed, VRS we completed, leave encashment we discussed, HRA now we are discussing, RPF alone is pending, where this salary definition is applicable. Correct? I hope you are able to recollect what I am explaining. Getting it? You just listen to this carefully. You listen once again. Problems are also given. You just observe those problems. Believe me, you are done with salary chapter. So, how much is exempt? So, actual amount, how much you received? Rent paid minus 10% of salary. Suppose you have paid rent 0. For some 2 or 3 months, you did not pay rent at all. For those 3 months, you will not get HRA exemption at all. Remaining 9 months, you paid rent. For those 9 months, HRA exemption you will calculate. So if for any month you don't have rental expenditure at all, for those months, whatever HRA you received from the company is fully taxable. Remember, HRA you have to calculate month wise. If all the months you have stayed in rented house, all the months salary information is same, you know, HRA amount is same, rent paid expenditure is same, city is same, then entire 12 months put together at a time you can calculate. Getting the point. So this is HRA computation. So actual rent paid minus 10% of salary, 50% of salary or 40% of salary as the case may be. Now salary means what? Basic, DA for retirement plus commission. Suppose, sir, we are giving an employee accommodation facility, sir. We are giving the employee accommodation. Always remember this thumb rule in salary. Whenever you have a problem, accommodation facility is there. You need to value the perquisite. Calculate this at last. Calculate this at last. Getting it? So how to calculate income under salary? First calculate gross salary minus deductions. Then you will get income from salary. Getting it? Deductions means what? I have already told. No. Deductions. You have 3 deductions. Standard deduction, entertainment allowance, profession tax. Anyhow, we will discuss that later. So always whenever you are computing problem on salaries, no, accommodation related perquisite valuation, do it at last. Just before you compute gross salary total, compute accommodation perquisite. Next. So right now what is over, which means house rent allowance is over. Next, telephone allowance. You know what? If employer company gave telephone facility to employee, fully exempt, nothing is taxable. If allowance is given, allowance means what? I give money, whether he will use telephone or not doesn't matter, that is his choice. If I give telephone allowance, fully taxable. Telephone allowance is fully taxable. Are you getting it? Suppose I gave an employee medical allowance. Again, medical allowance means I have points to say. Suppose, employee for medical purpose, we are giving allowance, or we are giving reimbursement, or we are giving facility. Employer is having a hospital, medical, hospital is there. In that hospital, employee and his household member getting treatment, fully exempt. What is it? Fully exempt. Now, employee plus household member means family means what? Children, spouse, dependent parents, dependent brother or sister, only these are covered within the definition of family. If employee or his family members getting medical treatment in employer hospital, employer maintained hospital, it is fully exempt. Suppose employer is not having hospital, so employee is spending money, getting reimbursement from the company. He is spending money for medical treatment of himself and family. Family means only these people, man, remember. So for these people, he is spending money, medical expenditure, then getting reimbursement from the company. Now, this reimbursement is exempt. Only if the medical treatment is held in, if the medical treatment is taken in government hospital, or if medical treatment is for prescribed diseases given by Chief Commissioner of Income Tax or Principal Chief Commissioner of Income Tax, or if the medical treatment expenditure is for COVID illness of the employee or family member. For these purpose, he spends some medical expenditure, company is reimbursing, then only exempt. Suppose if employee or family member, they are getting medical treatment in a private clinic, they are getting medical treatment in a nursing home, they are getting medical treatment somewhere in a family doctor, and employer is reimbursing it, fully taxed. Suppose employee suffering from some particular problem, he went abroad. For that, he went abroad and took medical treatment. For that medical treatment, company already reimbursed. Now, to travel abroad, travel expenditure also company paid. Now, in abroad, they stayed for some number of days. Stay expenses also company paid. So, if employee who has taken medical treatment outside India, treatment costs, traveling costs, boarding and lodging costs, completely company only, reimbursed. Now, what about that? Medical treatment abroad, it is exempted to the extent exempted by RBI. Whatever RBI allowed, to that extent, whatever employer reimbursed, exempted. Suppose the employee spent 10 lakhs expenditure, entire 10 lakhs company gave, but RBI gave 9 lakhs only permit, 1 lakh is taxable. Now, on transport, travel expenditure 5 lakhs employee spent, company reimbursed entire 5, but RBI gave 4 lakhs only limit, then 1 lakh taxable. Further, for travel expenditure, abroad travel for medical treatment, that is exempted only to the extent of RBI. That to this exemption, when if gross total income of the employee does not exceed 2 lakhs. If employee gross total income is less than or equal to 2 lakhs, then only this travel expenditure is exempted, which is reimbursed by the company. You getting the point? How to identify gross total income? Compute income from salary. All perquisites, allowances, everything, even medical reimbursement, taxable items, everything, even medical treatment at abroad, taxable portion is there, add it, everything you total, except this 5 lakhs, except 5 lakhs of travel reimbursement, rest everything you total, taxable items. Identify income from salary, identify other heads, gross total income, if it is less than or equal to 2 lakh, then travel reimbursement for abroad medical treatment is exempted, otherwise it is fully taxable. Able to understand. Now, travel reimbursement for employee or the family member who is suffering illness plus one attendant, for them only company will give, that is only exempted. Suppose I am giving monthly some fixed allowance, I am giving some monthly some amount, whether he will spend it or not doesn't matter. Allowance is fully taxable. Reimbursement is exempt only if it is in a government hospital, prescribed disease, COVID, treatment at abroad to the extent permitted by RBI, travel and stay expenses to the extent permitted by RBI is exempted, provided gross total income do not exceed 2 lakh. Over. Suppose if on employee and family members' name, company took a medical policy, company is paying premium, fully exempt. Suppose employee only purchased medical policy, he is paying premium, I am reimbursing it, fully exempt. Allowance of medical allowance is fully taxable, please remember. That's it. So, So medical reimbursement we discussed. Medical elements we discussed. Yes or no? We have covered medical elements and medical reimbursement, all that. Just a minute, I think something is missing here. Here you see. So here, let me copy this page. Copy the page. I will paste it below that. I will paste it below that. So paste page. Yes, continuation. That's it. So we have even completed what? We have completed what? Medical policy on the employee. It is fully exempt. Suppose company has taken accident insurance policy. Accident insurance policy on the employee name. Fully exempted. Able to understand? Next. Suppose company is offering lunch. Getting it? If at all company is giving allowance, no, money is given to by the company to employee. Employer gave lunch allowance, fully taxable. Suppose no, company is having a food court. To the employee, I give a lunch voucher. He can use that voucher and to buy the food only. See, if I give allowance, no, whether he will spend or not, I don't know. I gave money, monthly some amount I gave for lunch purpose or tiffin purpose, whatever. Some allowance I gave for food and beverages, fully taxable. Suppose if I give him voucher, he cannot use it anywhere else. He can only use it for food redemption. If I give a voucher, lunch voucher, up to 50 rupees per meal is exempted. Getting it? That's it. So lunch facility, if I give lunch facility by voucher, up to 50 rupees per meal is exempted. Gift. Suppose no, employee did something well in this month. So company want to give a gift to him to reward his service. So we gave a gift. Cash we gave, fully taxable. Suppose you gave a voucher or kind, some non-monetary thing you gave. If the value is not exceeding 5,000, fully exempt. In the entire year, if the value is not exceeding 5,000, fully exempt. If the value is exceeding 5,000, fully taxable. Alternative treatment, up to 5,000 exempt. Beyond that, whatever the value of the gift is, that is taxable. So gift allowance, gift in kind. So gift in kind I did not write here. So gift allowance. So gift allowance is taxable. So here you add one more point. Gift in kind. So that also we have covered. Yes or no? Understood or not? I hope you are able to recollect these many points you have studied in, this one. Next. Contribution to RPF in excess of 12%. Interest on RPF in excess of 9.5. What does it mean? Suppose employer is contributing monthly to recognized Provident Fund in the name of employee. Employee is also contributing out of his salary to Provident Fund. For him, it's a ATC deduction. Now, company is contributing in your name for your future benefit. That's a benefit for you, right? So, if company is contributing for your future, some amount to the Provident Fund authorities. How much? If it is up to 12% of salary, company contributed, fully exempt. If it is beyond 12% of salary, that excess amount over and about 12% of salary, if employer is contributing in the name of employee to the Provident Fund authorities in excess of 12% of salary, fully taxable. 12% of salary means what? Salary means what? Basic. DA for retirement, commission percentage of turnover. So in reality, in problem, what they will tell you is employer contributed 20% of basic to RPF. Employer contributed 15% of salary to RPF. Like that, they'll give you. First, how much he contributed? Money. Convert it into money first. From that, reduce 12% of salary. Identify salary, basic, DA for retirement, commission percentage. Identify the problem, amounts. Apply 12%. Value identify. How much value amount contributed? How much amount exempted? Balance, if at all positive, tax it. Otherwise, exempted. Able to understand. Some students know what they do is, in exam they'll give you, employer contributed 20% of basic salary to PF. Directly this fellow will do 8% tax. 8% he will tax it directly. Because 12% exempted. You should not do like that. You will get a wrong answer if you do. Always take a working note. How? Actual amount contributed, how much? Identify. 20% of basic. Basic is what? Check out. 20 apply. Amount you put. Minus 12% of salary. Salary means what? Basic. DA for retirement. Commission percentage of turnover. Amount. Total it. Getting it? Apply 12%. Value you will get. Amount contributed 10 lakh. Value 9 lakh. 1 lakh is taxable. You should always compute like this in a working note. Only then you will get marks. Now, so in excess of 12% of salary, exceeding 12% of salary, if any contribution is there, only that is taxable. Same way, in that RPF, company will be adding interest every year. If the interest rate is 9.5% per annum, that interest is exempted. If the interest is more than 9.5% per annum, suppose if company is paying 13% interest, then 3.5% interest is taxable. They'll give you interest amount. So 14% interest is equal to 14,000 rupees. Now 9.5 means how much? 9,500. So 4,500 is perquisite. 4,500 is salary, not a perquisite, salary, taxable. Next, leave travel concession. What is leave travel concession? This is if an employee and along with family, personal reason, they are going for a journey, they are going for a holiday in a block of 4 years. What is it? In a block of 4 years, 2022 to 2025. Right now, the ongoing block is this one, 22 to 25. This provision is added in 1986. So 1986, 87, 88, 89. That is one block. 1991, 92, 93, one block. 94, 95, 96, 97, one block. Like that, right now, what is the block? 2022, 2023, 2024, 2025. This is the block. Sir, financial year, calendar year. Calendar year. In this 4 calendar years, if you go for 2 holiday trips, you and your family. Family means what? Spouse and children. Children means how many? 2 children. Getting the point? 2 children. 2 children means what? 2 children only. Suppose if at all twins were born or triplets were born. Getting it? First time employee has been blessed with 1 boy. Second time he was blessed with 2 boys at a time, twins. They are treated as 2 children only. Now, this employee went for a holiday trip. The entire trip cost, not staying and lodging, only travel cost, company reimbursed fully. Entire travel expenditure which employee went on leave travel, that entire travel expenditure company only paid for the journey. Entire amount is exempted. Entire amount of leave travel is exempted, provided the leave travel must be within India, not outside India. So within leave, if any leave travel facility is taken by employee within India, whatever travel expenditure company is bearing, that is fully exempt. Now, how many holidays employee can take? 2 holidays, 2 journeys. What is it? 2 journeys it is exempted. 2 journeys every year? No. In a block of 4 calendar years, 2 holiday trips employee can take up. 2 holiday trips, whatever traveling cost is it, that is exempted in a block of 4 years. Sir, suppose there is one block, 22, 23, 24, 25. In these 4 years, I did not went any place at all. No leave travel benefit I taken. Now what to do? Can I carry forward 2 into the next block, 26, 27, 28, 29? In this next block, can I carry forward 2? No. If at all an employee did not utilize leave travel benefit under 10 clause 5, in a block, he didn't use at all. One leave benefit, 1 holiday can be carried forwarded to next block. Accordingly, in the next block, 3 leaves he can use. 3 holidays he can use, provided the carry forwarded that should be used within the first year in the next block. Then, suppose employer my tax liability, employee tax liability, employer pay. I'm earning salary, right? On this salary I have to pay tax. This tax also company is only paying. So good, my bosses. So on the perquisite which I am getting, company is only paying salary. The salary paid by company on my salary, my tax, my income tax, they pay. It's a benefit to me now. It is taxable in my hands now, but it is exempted. It is exempted. Now, you know what? Company is paying income tax. No, my income tax. For them, it's an expenditure at the end of the day, because my expenditure they are paying. So it's a business expenditure, but they cannot claim deduction under 40 subsection A, clear disallowance point. If a company, if any tax is paid on non-monetary perquisite given to an employee, the tax paid is not allowed as deduction for the employer who is a business person. Under PGBP, he will not get deduction. For me, under salary, is it taxable? No. Almost 1 hour. All these points I've covered. Still, we have few more points. If at all we discuss these points, I'm telling you, majority of the salary provisions we have covered. Next. Already gift in kind is there, ma. Sorry, I wrote here. Gift in kind is there. Next. There are some facilities like what? Medical facility, which I already told you, telephone facility, servant facility, gas and water facility. By the way, telephone facility is fully exempt. Medical facility already discussed. Facilities, they are taxable only for specified employees. Perquisites, no. Perquisites are 2 types. Reimbursement facilities. Reimbursements are always taxable for every employee. If at all any exemption is there, that exemption apply. Generally, most of the reimbursements are fully taxable. Facilities, no. They are taxable only for specified employee. Specified employee means what? If an employee is a director in a company, he is a specified employee. If an employee is having more than 20% ownership in the company, more than 20% profit sharing ratio in the employer business, is a specified employee. If an employee monetary salary, what is it? Monetary salary amount is more than 50,000 per annum, is a special employee. Right now, if you apply that definition, no, right now, this definition was defined 25-30 years ago, specified employee definition. The same thing is continued even now. Now tell me, even a watchman, security guard is getting yearly 3 lakhs amount. He is a specified employee. So right now, if you apply specified employee definition, everybody is a specified employee in reality. But exam point of view, they are testing MCQs. So specified employee point they will test. So accordingly, facility, what facilities? Gas facility, servant facility, getting it? Transport facility, education facility, medical facility, telephone facility, all these are exempted. All these are, by the way, telephone facility is fully exempted, that is given specifically. So medical facility, education facility, let me highlight with red color. Medical facility, just a minute. Yeah. So medical facility we have covered already. Now, medical facility, education facility, transport facility, servant facility, gas, water, electricity facility. These facilities, no, only if a specified employee get this, it is taxable for him. If a normal employee also getting these facilities, fully exempt for him, it is not taxable. So these facilities are taxable only for specified employees. For normal employee, we won't tax it. For logic, getting it? So servant facility, how much we will tax it, by the way? Whatever servant salary company is paying, no, that is benefit in the hands of employee, that is taxable. Gas, water, electricity. If company is buying from somebody and then giving gas, water, electricity, whatever company paying them, no, that is perquisite, that is taxable. Suppose if company only manufacturing and giving it to employee, manufacturing cost is the benefit in the hands of employee, that is perquisite, over. So no, servant over, gas, water, electricity over. Then telephone facility fully exempt, not at all taxable. Then suppose if a company is giving a car to an employee. Sir, before car, I will discuss mobile asset topic. Mobile asset. What is a mobile asset? What is a movable asset? Very simple. Suppose, no, company gave furniture to the employee for usage. Since he is using furniture, so no, it's a benefit to the employee. How much is the value of the benefit that is taxable? How much is the value of the benefit that is taxable? The value of benefit of furniture given to an employee, nothing but movable asset. Suppose if the company is giving movable asset for usage, movable asset for usage. So company is giving movable asset for usage of the employee. How much is the perquisite? 10% per annum of original cost. Suppose if the asset is owned by the company. Suppose company purchases some asset. That asset is given to employee for usage, for personal purpose. What is the benefit value? How much is the benefit employee is getting because of using it? 10% per annum is the benefit. Suppose if the employee is using it only for 6 months, he has taken that facility, then 10% per annum into 6 months into original cost. So for how many months he is using that facility, enjoying that facility, only for that many months only, movable asset perquisite we calculate. Suppose no, company is taking the asset on rent, giving it to employee. Suppose company has taken AC on rent and installed it in employee house. AC rent itself is perquisite. So rental expenditure is perquisite. Rental expenditure is treated as a perquisite. See, at the end of this entire chapter, I will give one summary. Like what are all these points? I'll give common sense based summary. If you listen to that, that's enough. Suppose no, for employee, I gave laptop and computer for usage, fully exempt. If the mobile asset is laptop and computer, which is given for employee, whether for official, personal, doesn't matter, fully exempt. If any other asset is given for employee usage, mobile asset, 10% per annum of the original cost if it is one asset. Rental expenditure incurred by the employer, if at all it is rented and then given to employee. Suppose no, company purchased some asset. That asset is sold to employee. Movable asset is sold to employee. On this I have explained the problem already. In that problem also, once again I repeated the provision. Movable asset I sold to employee. Suppose if the company is selling immovable asset to employee, that's a transfer of capital asset, capital gains will apply. If I give movable asset to employee, in the course of employment he purchased the movable asset from the company. Suppose no, employee has purchased computers and electronic items from the company. Okay, for company, no, company originally purchased at 1 lakh, whereas now employee paid 10,000 rupees and purchased it. Now 90,000 rupees discount, that's a benefit. Oh, you should not calculate like this the benefit. Perquisite valuation rule says for computer and electronics, company has to claim notional. Now, some asset belonging to the company I purchased. Is there any benefit in this purchase derived by me? How to calculate this benefit? Look at original cost of the asset minus claim notional depreciation. Reduce notional depreciation for every completed year of usage. For every completed year of usage by the company. So for how many years company used that asset in their own name? For how many years that asset is in the name of the company? For completed years of usage by the company. In case of in case of computers and electronic items, 50% WDV basis, we claim notional depreciation. So 3 completed years. Company purchased the computer on 1st May 2019. This employee purchased. When company purchased, just a minute. When company purchased the computer, 1st May 2019, company purchased the computer. What price? 1 lakh. Getting it? Now the employee purchased this computer from the company on 10th June 2022. Employee purchased. At what price? He just paid 10,000 rupees and bought. Or let's assume he paid 1,000 rupees only. 1,000 rupees he paid and purchased this computer. Now, is employee got any benefit in this? Let's check out. 1 lakh is the original cost, right? Now, since the item is a computer and electronic item, notional depreciation as per perquisite valuation rule is 50% WDV basis. Suppose if it is car, 20% WDV basis. If it is any other asset which is sold by company to employee, 10% SLM basis. These are the valuation rules. Notional depreciation valuation rules. 1 lakh. Now, first of all, now company purchased it on 1st May 2019 and sold to employee on 10th June, which means the gap, who is the owner? Company only owner. For how many years company is owner? From 1st May 2019 to 10th June, it is more than 3 years. Exactly speaking, 3 years, 2 months approximately. Now, how many completed years company is owner? Only 3 completed years only company is owner. Only for completed years of ownership. Only for that claim notional depreciation. So 1 lakh minus 50%, you will get 50,000. Minus again 50%. This is for first year. This is for second year. 25,000. Again claim depreciation for third year. 12,500. 50%. So what is the value? 12,500. So value of the asset is 12,500. Company employee paid how much? 1,000 rupees he paid and got 12,500 worth of asset. 11,500 is taxed as perquisite. 11,500 rupees is treated as perquisite in the hands of employee. Suppose if it is motor car, then instead of 50%, we will calculate 20%, 20%, 20%. If it is any other asset, SLM 10%. SLM basis means what? On original cost, we will calculate 10%, 10%, 10%, 3 years. Got clarity? So when a company sells any asset, mobile asset to employee, certain price or zero, free price, whatever, what is the value of the movable asset? How to arrive the value of the asset given to employee? Very simple. Computer and electronic items, 50% on WDV basis reduced for every completed year of ownership with the company. I hope I am giving you clarity. By the way, I have given problems also. If you look at these problems, I'm telling you most of these adjustments I've covered in these problems. Getting it? So movable asset, usage, everything, sale, both are completed. Just a minute. Yes, that's it. Now let's continue with motor car. So suppose company is giving car facility. Car facility is taxable only for specified employees. First of all, facility. Now how to tax car facility? Very simple. Very simple. Suppose car facility, cars are divided broadly into 2 categories. Less than 1.6 cc, more than or equal to, not exceeding 1.6 cc, more than 1.6 cc. Getting it? So if the cc is up to 1600, then perquisite value is different. If the cc is more than 1600, the perquisite value is different, exceeding 1600. Now suppose company gave car facility. Company only owns the car. Employer owns the car. Company owns the car. Expenses of the car, they are also employer only bearing. Suppose if this car is completely for official purpose. If the car is completely for official purpose, No benefit to employee. What is the perquisite value? What is the taxable value? Zero. Suppose if it is for personal purpose. Now company gave car, expenses also they are only bearing. Now car, no, company car I'm using, no, use of movable asset. So use of movable asset, what is the perquisite? 10% per annum for using the car. Less. Expenses of the car company only bearing, no, actual expenses. That itself both put together is taxable in the hands of employee. So actual expenses means what? Fuel, maintenance, repair, driver salary, everything. Company is only paying everything. And remember, this entire car is completely for personal purpose only. So whatever actual expenses company spent, no, that is for employee benefit, personal benefit, fully taxable. Car is company own car, 10% per annum of the original cost. Suppose company took the car on rent and gave it to employee. Rent expenditure is perquisite. Whether it is more than or less than 1.6 or more than 1.6 is, it doesn't matter. Suppose car is used for official plus personal. Both the purposes employee is using. Now I cannot tax full benefit. No. How much? Perquisite valuation rule says if the car is owned by company or rented, whatever, company is providing the car. Company is providing the car. If it is completely personal, we have seen. If it is completely official, zero perquisite. If it is completely personal, use of movable asset plus actual expenditure is perquisite. Very simple. If it is official and personal, how to value? Then if it is complete, if it is official plus personal, no. If the car capacity is less than 1600 cc, then 1800 per month is the perquisite. If the car capacity is more than 1600 cc, 2400 per month is treated as perquisite value. Suppose if company gave driver also, and the driver is also used both officially and personal, then 900 rupees is perquisite in the hands of employee. So what are they saying? If you are using car for both official and personal, car is given by company, expenses are borne by the company, but it is used for both official and personal law. So personal portion, how much we assume? We assume this much is the benefit of personal portion. Actual expenditure doesn't matter. This is deemed to be the personal portion benefit. Accordingly, this much is taxable. Over. Second part. Suppose car is employee only taking the car. His car only. Car is owned by employee. His car only. Out of his own money he bought. But expenses of the car, running and maintenance, employer, company is bearing. Suppose company is bearing the expenses, no, completely. Suppose if the car is used for complete official, perquisite is 0, 0. Completely personal, actual expenditure. Completely personal, actual expenditure. Sir, for car, a car, employee car, man, 10% per annum original, that and all don't apply. That is that when we will apply that point, the company provided the car. Here car is owned by employee. Only expenses we are giving him. Expenses are completely for personal purpose. Car expenses. Entire expenses is perquisite. Suppose here official plus personal both are there. Car owned by employee. Employee's car, that is. But expenses are given by company. Maintenance, running, everything. And this car is used for both official and personal. Then look at what is the actual expenditure. Check out. Minus. If the car capacity is less than 1600, 1800 per month, you reduce. Suppose if driver is also given 900 per month, you reduce. Balance if any is there. If balance if any is there, this is only perquisite. If balance if any is there, this is only perquisite. Suppose if it is more than 1600, then what is the actual expenditure company spent? Minus 2400 per month you reduce, minus 900 per month if driver is also given, reduce, balance only perquisite. Over. This is car. Suppose if company, suppose employee is having two-wheeler, company is only giving entire, running and maintenance cost, then actual minus 900 per month, reduce it. Balance is perquisite. That's it. Car is over. Suppose if employee is given two or more than two cars, able to understand? Any one car, we will apply this rule. Remaining cars which company gave, we will treat as if it is for completely personal purpose. That's it. So car related principle is over. Motor car related principle is over. I hope you are getting. Because I need to explain you the things. I'm explaining you. In fact, I'm not just simply reading, opening the book. I'm not reading. Suppose company is giving ESOP shares or sweat equity. So since my employee is working superbly fine, he has contributed a lot. We allotted stock options, or we allotted sweat equity shares, or we allotted preference shares or debentures. Some securities we allotted. That recognition for him. Now we allotted shares and securities. No. Whatever the market value of the shares and securities is there, that is the benefit in the hands of employee, and that is taxable. Now you see these many items we are saying taxable, taxable, taxable. No, that is gross value of perquisite. Suppose no, we recovered something from employee in return. That you reduce balance benefit only tax it. Right now, whatever I told is benefit valuation. From the benefit value, if employee repaid anything to the employer, reduce that balance only we will tax. That's common sense point. Almost we have discussed many points. Now, contribution to ATCCD. Contribution to ATCCD. Suppose if company is contributing to national pension scheme referred under ATCCD on employee name for future benefit, whatever I contribute, it is treated as salary income under 17 subsection 1, fully taxable in gross salary. Whatever employer contribution is there now, under ATCCD subsection 2, employee can take deduction under ATCCD chapter 6A. In chapter 6A marathon video, it is covered. Check out there. Then finally, suppose if company is giving accommodation facility, how to tax this perquisite? For this, I have a diagram. Just wait a minute. Now you see. So how to value accommodation facility? Suppose if a government employer, if he gave staff quarters or accommodation or bungalow to their employee, getting it? Employee and his family and all, they can stay happily in that bungalow. Now they are getting rent-free bungalow, rent-free house. Now, which means employee is getting some benefit. What is the value of the benefit so that we can tax it? How much amount we can tax it? What is the value of the benefit that we can tax it? Very simple. Whatever license fee determined by the government per month, that itself is treated as value of the house per month. Getting it? So this is taxable purpose for government employee. Suppose if the employer is not a government, non-government, and company has their own staff quarters, that quarters is given to employee for his residential purpose, then what is the value of the perquisite so that we can tax it? Suppose we have given accommodation in a city where population is more than 25 lakh, then the value of the perquisite is 15% of salary. Suppose, sir, what is salary? I'll come back, wait. Suppose if the accommodation is given in a city where population is more than 10 lakh but not exceeding 25, then perquisite is 10% of salary. Suppose if accommodation is given in any other city where population is less than 10 lakh, then perquisite value is 7.5% of salary. Suppose company don't have own premises. They rented one, they leased one premises. That amount, that premises we gave it to employee for his residential purpose. Means rented accommodation. Then what is the perquisite value? 15% of salary or actual rent, whichever is lower. Suppose company is giving accommodation to employee not in a rented premises but in a hotel, then 24% of salary or actual amount paid to the hotel, whichever is lower, that is the benefit. We are giving a house to employee, own house we gave to employee for stay, or rented house we gave him for stay. In that we gave furniture also. Furniture is given, movable asset is given for personal use. What is the perquisite? 10% per annum of the original cost for furniture owned by the company. Or if at all furniture is hired outside, that furniture is given to employee for personal use, rental expenses. So first identify accommodation. So if accommodation is given for employee residential purpose, how to tax? This is the perquisite value. In addition to that, furniture is also given, then this is the perquisite value. Now calculate the perquisite like this. If at all employee repaid company some amount monthly, reduce that. Balance amount, the benefit only tax it. Simple. Accommodation provision over. Now what do you mean by salary? Now you see the word salary is used in these many sections while calculating taxable amount. So for accommodation, salary is used. Salary means what? Basic, DA for retirement, any commission, bonus, taxable portion of allowances. So how to apply this definition? I have added a problem also, so you can find out there. Getting it? Basic, DA, any commission, bonus, taxable portion of allowances. Whereas for RPF, in excess of 12% of salary is taxable. HRA, rent paid minus 10% of salary, 40% of salary, 50% of salary. Salary means what? Gratuity, where act is not applicable. 15 by 30, nothing but 1 by 2 into average salary. Means completed years of salary. Salaries means what? Leave encashment. 10 into average salary. Unutilized leave divided by 30 multiplied by average salary. Salary means what? BRS. 3 into completed years of service into salary. Number of months service left multiplied by salary. Salary means what? Basic. DA for retirement, commission percentage of turnover. Suppose if an employee has received gratuity and he is covered under Gratuity Act. Now 15/26 into last drawn salary into completed years of service or part thereof in excess of 6 months. Salary means what? Basic plus any DA. So whatever salary definition that is used in salaries chapter, broadly 3 definitions. For RFA, salary means apply this definition. For these 5 purposes, salary means apply this definition. For gratuity, where Gratuity Act is applicable, apply this salary definition. Be able to understand. Getting it? So that's it. With this, even accommodation facility point is also completed. With this salaries chapter, provisions we have come. Now very simple. Once again, I'll come to the overview. Getting it? So first, in salaries, how to compute? First, you should compute gross salary. How to compute gross salary? First, compute taxable salary under subsection 1. Then compute perquisite values that are taxable. How to compute perquisites? They can be reimbursement or they can be facility. How to compute taxable facility, education facility, medical facility, accommodation facility, car facility, we discussed. If at all reimbursements, fully taxable. Medical reimbursement in government hospital exempt. Medical reimbursement for specified disease, COVID disease exempt. Profit in lieu of salary, BRS, I told. Yes or no? Salary meaning basic, DA, bonus, commission, gratuity, retirement gratuity, exemption we have discussed. Leave encashment on retirement, exemption discussed. Pension on retirement we discussed. Monthly pension, fully taxable. So like this, you compute what is gross salary, compute all taxable items. Then from gross salary, we have deductions, 3 deductions, standard deductions up to 50,000. Entertainment elements. Deduction for entertainment elements is available only for government employee. First of all, if entertainment elements is there, first we will tax it. Gross salary, we will tax it as part of salary. We will tax it. We have a deduction. 1/5 of basic salary, 5,000 rupees in a year. Actual amount of elements received, whichever is lower. That is deductible. Profession tax paid. If employee is paying profession tax to the state government, whatever amount of profession tax you pay, that you can claim deduction. Suppose if profession tax is paid by employer, first treat it as income from salary under salary definition. Then the amount paid by employee, you will claim deduction under 16 again. So from gross salary, you claim this deduction, then you will get income from salary. In exam, they'll give you entire problem. They may ask you either gross salary or they may ask you income from salary. If gross salary is asked, before deductions, whatever amount is there, that is gross salary. If income from salary or taxable salary they asked, then the net salary, this is the answer. I hope you are clear. Oh my God. Almost 1.5 hours we spent just to revise the content. Okay, in reality, in my regular class, I will be taking 9 hours, 8 to 9 hours on this chapter. Only concept discussion with illustrations. Here I am giving you 1.5 hours and 1 hour problems. Hardly 2.5 hours I am finishing. That's a revision. No, it's a marathon, man. First of all, understand. It's not a detailed regular class. It's a marathon. Still, I have covered all the provisions clearly with explanation and logics. That's it. Take care. All the very best. With this, salaries is stopped. Provision is over. Now continuation. Watch problems. Solving of problem is also important. I told you the provision. Now I'm going to apply the provision in the problems. Some 5 to 6 problems I've given. You just watch these problems. Believe me, you will get complete clarity on the salaries chapter. Remember, salaries weightage is minimum 8 marks to 12 marks or even sometimes 14 marks. The straight question will come. Okay, that's it. Take care. Continue watching the problems.